The U.S. economy is looking robust. Recent economic data points to strong growth with low unemployment and rising wages. This positive news, however, has investors anticipating a more aggressive stance from the Federal Reserve. The Fed is tasked with keeping inflation in check, and a strong economy can lead to rising prices. To combat inflation, the Fed is likely to raise interest rates several times this year. Higher interest rates make borrowing more expensive, which can slow economic growth. This delicate balancing act is closely watched by investors worldwide, as the Fed's actions have ripple effects across the global economy. The stock market initially reacted positively to the strong economic data, but concerns about higher rates have tempered some of the enthusiasm. Investors are trying to gauge the pace and extent of the Fed's rate hikes, which will depend on incoming economic data. The coming months will be crucial in determining the Fed's path and its impact on the U.S. and global economies. The next Federal Open Market Committee meeting, where interest rate decisions are made, will be closely watched for further clues about the Fed's intentions. For years, Japan has grappled with sluggish economic growth and deflation. The Bank of Japan, the country's central bank, has maintained ultra-low interest rates and implemented various stimulus measures to boost the economy. However, recent economic data suggests a potential shift in the BOJ's stance. Inflation in Japan, while still below the BOJ's target, has been inching upwards. This, coupled with a weaker yen and rising global interest rates, has fueled speculation that the BOJ might be preparing for a policy shift. A potential rate hike, while still seen as some time away, is now being discussed more openly by policymakers. A change in the BOJ's policy would have significant implications for global financial markets. Japan is a major holder of U.S. Treasury bonds, and a shift away from ultra-low interest rates could lead to a sell-off in these bonds, potentially impacting U.S. interest rates. The BOJ's next policy meeting will be scrutinized for any signs of a change in direction. The UK economy has been grappling with a unique set of challenges, including Brexit uncertainty and the ongoing energy crisis. After a period of volatility, UK bond yields have recently cooled down, suggesting that investors are less concerned about inflation spiraling out of control. Inflation in the UK, while still high, has shown signs of easing. This has provided some relief to the Bank of England, which has been raising interest rates to combat inflation. However, the UK economy faces significant headwinds, including slowing growth and a potential recession. The recent political turmoil in the UK has also added to economic uncertainty. The resignation of Prime Minister Liz Truss and the appointment of Rishi Sunak have raised questions about the government's economic policies. The Bank of England's next move on interest rates will be heavily dependent on incoming economic data and the government's fiscal plans. The UK's economic outlook remains uncertain, and investors are closely watching for signs of stability and a clear policy direction. China, the world's second-largest economy, released its fourth-quarter GDP figures, painting a mixed picture. While growth has shown signs of picking up, it remains below the government's target. The country continues to grapple with the impacts of its zero-COVID policy, a property market downturn, and ongoing trade tensions with the U.S. The U.S. and China have been engaged in a trade war for several years, with tariffs imposed on billions of dollars worth of goods. This has created uncertainty for businesses and weighed on global trade. The Biden administration has maintained a tough stance on China, and any escalation in trade tensions could further impact global economic growth. Despite the challenges, China remains a key driver of global economic growth. The government has announced measures to support the economy, including infrastructure spending and monetary easing. The effectiveness of these measures and the trajectory of U.S.-China relations will be crucial factors in determining China's economic outlook. The world is closely watching China's economic performance, as it has significant implications for global growth and financial markets.